Good morning, this is Kim, your instructor, and this is the first of two video recordings I'm going to make right now. As promised, I told you I would go over a practice tax test, so you're ready for a short quiz on Monday. So before I start going over the test, I want to tell you what I would do to prepare for it. If you look over here, on the quiz, I've added two items up here in the top on red. The first is a standard deduction for 2014 and it is $6,200. The second is a personal exemption amount for a single person and it is $39.50. And again, you would have found these on your 1040 tax return that you can use when you work on your exam on Monday. Next, just for memory, I like to put the steps down to complete a tax return. So the first step is to calculate total income. Lines, I can't remember the first set of lines at the beginning of the form. The second is to subtract all the adjustments. Adjustments would be items like student loan interest expense, tuition and fees, IRA contributions, those, or maybe moving expenses. That would be the extent of it. When you subtract all those adjustments, your answer will be AGI, or adjusted gross income. And remember, it's important to understand why AGI is a key number on our tax return. Next, after we have AGI, we subtract either itemized deductions or the standard deduction. Standard deduction being 6,200 up here. And we're going to subtract whichever is higher. Once we do that, we're going to have taxable income right here. At this point, we go to the tax tables. You will go to the tax tables unless I give you the tax rate in the problem. Calculate the tax due at this point, and then lastly, subtract any tax credits. And remember, it will say credit on the item to make sure it's very clear that you subtract these after you calculate tax due. All right, so let's go. Problem number 1. Ben arrived at the following tax information: salary, bonus, alimony paid, itemized deductions, interest earnings, IRA contribution, one personal exemption. It's left blank here because for you, you have to remember what it is, and it's $39.50, so I'll go ahead and type it in right now. And remember, the standard deduction is $6,200. First question, what would Ben report as AGI? So if you go over here, I just like to put a worksheet together to help me organize all of these numbers. So the first category I'm going to look at is income, and I see here that Ben has a gross salary of $31,780. So I'll put that over here for income. Bonus, also part of total income, so I'll add $5,000. Alimony paid, no. Itemized deductions, no. Interest earnings, another part of income. Let's put in $300 here. IRA contribution, nope, that's an adjustment. Moving costs, nope, one personal exemption. Okay, it looks like I have all my income. So I'm going to add that up right now, just a quick sum. And there's my total income. Now I'm going to adjustments. Do I see any adjustments? Well, I do. First adjustment here is alimony paid, 707. If it's paid, it's an adjustment. If you receive it, it's income. So in this instance, it's an adjustment. Itemized deductions, no. I see IRA contribution, yes, $3,000. That's also an adjustment above line 37. And lastly, moving costs are an adjustment. Now remember, you could look on your form and see these categories. Now I'm going to add up total adjustments right there. And then I'm going to take my total income, subtract my adjustments, and that is my AGI. So my first answer here is going to be 32,923. Okay, done with that. to go ahead and highlight this. Second question is, what amount would Ben report as taxable income? Okay, so I'm going to keep going. Deductions. For deductions, it's either the standard or itemized. Since the standard deduction is 6,200 and my itemized deductions over here are 6,890, I'm going to use 6,890. Oops, one other thing is deducted here besides itemized deductions, and that would be the personal exemption. Okay, personal exemption, I'm going to put 6890 up here. Personal exemption is 3950. Remember, personal exemption goes both ways for the standard deduction and for itemized deductions. So let me add these up. 10,840. So now my taxable income is going to be my AGI, subtract all my deductions and exemptions, and there's my taxable income. Let's go over here, 22,083. Done with that problem. Moving on to problem number 2. If Karen had the following itemized deductions, should she use Schedule A or the standard deduction of 6,200? So what we need to do here is add up all her itemized deductions. So let's go over here to this worksheet just to make this easier, I think. First of all, we know mortgage interest is the biggest itemized deduction that most of us will have, so that's 3980. Next, we'll add medical and dental exceeding 7.5% of AGI, 430. That is also included on our Schedule A. State income tax, also included. Property taxes, yep, that's another line item. Job-related expenses, sure is, if they're not reimbursed by your employer. Child care tax credit. Well, I know that a credit is way down here at this end, not included in itemized deductions. So we do not include that here. So we'll add all these together, sum them up. 7510. Is that greater than our standard deduction? Yes, it is. So what should she do? We go up here and answer this. Take itemized deductions of 7510. Done with that problem. Next, why is AGI important? We looked this up in class. If you don't remember, I want you to look it up again. Probably the single most important number on our tax return. This problem right here will be your most complex problem, but that does not mean it has to be difficult. It means we need to go back here and use our tables. So I'm going to clear the contents here. Start over. What are taxes due? So this takes us all the way to the very end. First thing we're going to look for is income. What income categories do we have here? Well, we have salary, 50,000 to start. Itemized standard, personal exemption, IRA. I don't see any other income there. Now I'm going over here and I'm looking for adjustments. Do we have, oh yeah, we have the IRA contribution right here of $1,000. So that is an adjustment. Take that, credit, credit. Okay, I know those are at the end. I don't have any other adjustments. My AGI is $49,000. Now I'm going to go over here to deductions. Itemized deductions are 6,000. Well, that's lower than my standard deduction of 6,200. So I'm going to use the standard deduction of 6,200, and my personal exemption is 3,950. So now I've used all of those and my IRA contribution, and I have taxable income of 38,850. In this problem, I gave you the tax rate of 0.15% or 15%, which is 0.15. So over here, I'm going to take 0.15 and I'm going to multiply it times my taxable income. There's my tax due. Next, do I have any credits? I sure do. So I have credits of 500 and 400 for earned income, which equals a total of 900. Okay, so my final tax due is going to be my calculated tax due, subtract my credits, or 49.27. So over here, 49.27. Remember, I don't like change, so just leave that off. Okay, done with that. Next problem. What are the taxes due on $150,000? Remember from class that I posted the tax tables in your D2L folder on the home page. So what I've done here is just copied the table to make it easier for illustration. So $150,000 falls in this range right here. Once I figure out the range, I know that this is the formula that I need to use. So let's look at this. The formula says that I take 150,000 and I subtract 90,750. So that's the first step. Take 150 and subtract 90,750. So that's 59,250. And what do I do next? I multiply that times 0.28. Okay, so I'm going to do this number, change 28% to a decimal, so I'm going to multiply it by 0.28. I don't think I like that. Times 0.28. And that gives me 16,590. And then I'm going to add 18,481. And remember that this number comes from all the taxes due at each one of these marginal tax rates. So I'm going to take this number 18481. I'm going to add it to my previous number. So this equals this plus this number. Tax due is now $35,071. What is the average tax rate from this question? Well, average tax rate equals tax due divided by taxable income. Just in case you forgot. So this is going to be 35,071 divided by 150,000. Let's do the math over here on Excel. Equals 35,071 divided by 150,000. 23%. Okay. Now the rest of these questions are related to your homework for this week. So once you complete your homework this week, I'd like you to go back and answer these last questions. Well, I hope that helped, and I'll see you in class on Monday. Thanks.